This is Retirement News Online. High interest rates may be bad for financing a home or carrying a credit card balance, but there is a bright side. A high interest rate environment can actually make it possible to refinance your retirement. And joining me to talk about this is advisor and radio host Tim Travis with TT Capital Management in Mission Viejo, California. And Tim, thanks for taking the time to speak with us today. Let's start out with bonds and how interest rates are affecting yields right now.
Well, great question. So bonds have an inverse relationship with interest rates. So the higher interest rates go, the lower the price of the bonds go. And so for the last several years, as interest rates have been rising, coming off the pandemic and the zero interest rate environment, bonds have just been crushed. And they're in the biggest drawdown in many decades. And so that's created an opportunity. So whereas two decades ago, 5 years ago, 10 years ago, there was very little in yield for retirees when they were investing in bonds just because interest rates were already so low. Now there's an opportunity to buy investment grade bonds at 6.5%, 7.5% yields. And as you take a little more credit risk, obviously you can get yields closer to 10%, which is kind of an equity-like return. And even on some AAA backed securities, we're getting yields at around 6.4% with very little interest rate risk. They're short-term in nature, short-term duration. So it's a fantastic time for savers to finally get rewarded in the bond market.
So Tim, annuities, especially fixed indexed annuities, are offering opportunities for protection and growth we haven't seen before, right?
Exactly. So insurance companies are really benefiting from the higher interest rate environment as well as the low volatility environment because they're able to hedge the equity market risk by buying options. That's a big part of how annuities work. And so what we're seeing is the insurance companies that are offering the annuities, the fixed index annuities, they're offering some of the biggest bonuses I've ever seen in my career. And the participation rates are outstanding. And they're constantly evolving the different indices that they offer. And so we work with our partners. Like any product, there's good ones and there's bad ones. And that's why it really helps to work with a professional who's experienced in navigating the annuity market. But absolutely, this is the best time I've seen in annuities in my career.
And finally, talk about some of the option selling strategies you're leveraging for income right now.
Well, great question. So we use options as a tool to generate income and reduce risk. So we don't engage in buying options to speculate as lottery ticket type investments. And so what we do is strategies like covered calls. So basically we'll own a stock. Right now we're finding a lot of opportunities in real estate investment trusts, for instance, publicly traded. A lot of these offer 6.5%, 7.5% dividend yields that are growing by about 3 to 5% per year. And we're able to buy the stocks and then concurrently sell a call maybe 20% above the current price. So we're locking in, let's say, that 7% yield. We might get another 5% from selling that call, let's just say a year out hypothetically. So that gives us, if the stock's totally flat, we get 12%, and then we have 20% upside beyond that if that stock price climbs. And if the stock rallies and the stock trades above that call price we sold at, then basically we're selling our stock, we're locking in our profit, and we free up the cash. So it's kind of a heads, you win, tails, you win as well. And if the stock drops, if we get a negative bear market or something happens in the industry, you're going to lose 5% less than you would have lost because of the call premium you collected. And you can repeat the same strategy again once that option expires. So it's an innovative strategy, Scott, that I think a lot of portfolios are just not getting enough exposure to.
That's Tim Travis in Mission Viejo, California. Thanks for watching Retirement News Online.